Hi there, good morning, and thanks for tuning to the Trade Setup. I'm Niraj Shah, and it's a morning unlike yesterday morning, wherein the cues are a lot more better than what they were yesterday. Not that the cues did anything to deter the markets from moving up yesterday either. So, firstly, the U.S. market updates, and ahead of the Georgia verdict, the the markets were marginally higher in trade, about 120 odd points for the Nasdaq Composite down, and the S&P also rallied from the lows of the day. Now, viewers, I mentioned this yesterday. Again, I'm not an expert, but I think a lot of people have, a lot of us have started bothering about, oh, Georgia, what will happen there will determine what will happen to the markets. I just bring into you again um, what some of the experts who actually track this very closely have written. It's a repeat of what I said yesterday, but it's important for some of you who didn't log in. We'll, of course, get to know. But essentially, the US Senate is currently controlled by the Republicans. But if two Senate seats from the state of Georgia fall in the Democratic hands, and therefore, since none of the candidates have received a majority vote, the runoff elections have been held. And if Democrats manage to win both the seats, then the Senate would be tied 50-50. And therefore, it gives Kamala Harris the tiebreaker vote. And therefore, it might be important in theory from a market's perspective that if Democrats gain control, then they will go out and pass laws very easily for hard stimulus, etc., etc., etc. And that might be something that might be negative for the dollar, but great for equity markets. What if it doesn't happen? Then status quo continues. And is the status quo bad? You got to ask yourself. No, it isn't. So, are we making too much of a meal of this? I'm no one to really say that. Maybe the markets have a flash reaction post this verdict as well. But most experts that I spoke to who track this very closely said it's a day's move. I mean, it'll all change. It'll all return to normalcy in a day. So don't get too bothered by this. However, couple of other things. Implied vols are moving up and swinging very, very wildly. There is this chart on the Bloomberg terminal which shows how IVs are the implied volatility much higher than historical price swings in the current period. So that's interesting. And IVs typically being higher might mean that higher volatility for the markets. That said, Asia and the SGX Nifty today point to little volatility. If you just look at the Asian screen, maybe ASX had a bit of a soft start, but some of the other markets did follow the US cues and therefore started off well. Kospi, as you see, off from the lows of the day. HSI flattish. So HSI and ASX, which is the Australian markets, were flattish. The others are maybe marginally higher or otherwise. The SGX Nifty should come up on your screen. Yesterday it was playing tricks on me by showing me a different number on this website, and the chart that we have right now showing absolutely flat. So no big moves anticipated for the Nifty at the start. Now, the key is, remember a day before yesterday we were talking about how the bank Nifty needs to perform for us to do well. Not rocket science, but I'm just laying it out here. Now, yesterday the bank Nifty put its hands up, and now the bank Nifty is only 620 odd points away from its all-time high of 32,347. So if the bank Nifty continues to perform, and whether it's HDFC Bank today or some other bank, I think it really helps. I mean, Axis Bank stole the show yesterday, but you never know, HDFC Bank might be in favor, and I'll tell you why in a moment. The oil uptick unlikely to make any large difference to the market at large. Oil sensitives, yes, but the market, remember in the past, if oil prices moved up, it was considered negative. Oil prices moving down, considered positive. I think that equation seems to have changed a little bit. Let's wait and watch. I doubt that it'll have a serious consequence on the market. The interesting bit would be the iron ore price surge, which had a really sharp uptick in trade yesterday, and that will be something that we'll all be watching out for. Today, the iron ore futures are down about a couple of percentage points, but commodities by and large, remember, I mean, I do think that because of these lockdowns, maybe there is a bit of a slowdown in commodity surge worldwide, except for oil, of course, which had that Saudi cut impact to it. But Indian steel stocks, because of steel price hikes compared to global parity, might continue to remain robust. So keep that at the back of your mind. What are the stocks? Actually, just before I get to the stocks to watch, there's this message that came in yesterday, maybe sometime post market hours or thereabouts. But ANI put out this message from Ken Juster, who's the US envoy to India, and he says, and I quote, that as the US and other companies find it increasingly difficult to operate in China or seek to diversify away from China-led supply chains, India has the strategic opportunity to become an alternative manufacturing destination in Indo-Pacific region. This is the US envoy to India. Now, viewers, just the point that don't think of these moves as short-term moves or as one-offs. Most companies who are saying this are actually saying that there's a structural shift and there are long-term contracts and they'll keep on coming. Even if India is not as big a beneficiary as some of the others, like maybe Vietnam or some of the others, India is a beneficiary. The PLI schemes definitely help. And therefore, you got to think of companies in this area which are all benefiting out of this and maybe invest in them from slightly long-term perspective. Anyways, stocks to watch in the session today. We can't not start off with HDFC Bank, right? The Q3 update came in. Total advances up about 4% quarter on quarter to 10.82 lakh crores. So that's a sharp rise for sure. They've of course maintained that the deposits have risen 3% quarter on quarter, which is up about 19% YOY. By the way, the deposits are up 19% YOY, which is not something to scoff at. So pretty good move on that front as well. And of course, the CASA ratio stood at 43% in December 31st versus 41.6%. Now, I don't want to confuse you too much. I'll just give you a quick snapshot of Motilal Oswal is saying. I'll read it out from my phone. Their view, they say that HDFC Bank continues to deliver strong growth in advances, which is likely to support fee income. The deposit growth, obviously, everybody knows remains healthy. And the CASA, which will continue to support the margin trajectory. I think it's true for all banks, but yeah, HDFC Bank continues to show that. And while slippages might increase slightly over the second half, the high provision buffer will keep credit costs under control and limit the impact on profitability. So they maintain their target prices of 1650, which is just 3.6 times adjusted book value, by the way. I must say, compared to a lot of other banking stocks, HDFC Bank, one of the principal stocks, the blue chip stocks, actually doesn't trade at very expensive valuations even now. This is average valuation for HDFC Bank, mind you, 3.5 times. During COVID, it had slipped to about 2.2. Otherwise, in peak, it goes to about 4.2 as well. The chart, maybe tomorrow I'll get you a chart of the HDFC Bank adjusted price to book. But this is average price to book valuations. Keep that in mind. GCPL or Godrej Consumer is the other interesting one. They gave out their trends. So demand trends, they say, Q3 update essentially continues to be stable in quarter 3. They'll deliver close to low double-digit sales growth in India. And the India sales growth will be driven by higher than mid-digit single-digit volume growth. So that is this a good number? Yes, compared to estimates. But keep in mind, they had a very soft base in quarter 3 last year, just about 2% growth. So I think people will take it with a pinch of salt. I doubt this is a big market moving or a stock moving update, but let's see. I'll be surprised if GCPL moves too much, but yeah, it's not a bad number, you would have to say. The bounce back in oil prices might lead to a bounce back in the prices of some of the upstream companies. ONGC, Oil India, ONGC. Remember, ONGC was the top loser yesterday. I dare say it could come back a bit today. Do watch out for ONGC. BEML certainly came off post the announcement about the strategic divestment, but they received orders from the Ministry of Defense for supply of high mobility vehicles, 758 crores. Let's see if this stalls the fall for BEML. And Concor, they're exploring the possibility of merging 3 of the subsidiary companies with itself. A lot of smart money is gotten into Concor. You might want to watch out for this stock in the session today. So that's the other interesting one. Edelweiss has put out an update on Adani Ports. They maintain a buy with a revised price target of 600. So you might want to watch that stock as well. So there are a few that will move around today. And remember, as I said, iron ore prices, they've been on a bit of a roll. So maybe some of those iron ore, copper related stocks could be in focus as well. What stood out for me, viewers, before we wrap up, is this update by Byron Wien. He's the vice chairman of Blackstone Group's private wealth solutions business, very senior person. So he's made some predictions, and he says that S&P 500 will tumble about 20% in the first half, but then climb back to 4,500. So essentially, for the year for 2021, his prophecy is that things will be good for S&P 500, but expect a major fall. Don't know when it'll come. First half, 6 months, so too long a time frame. But yeah, intelligent guy. He says large cap technology stocks will lag in 2021 and cryptocurrencies will gain more respect during the year. This is coming in from Byron Wien. He puts out these predictions, I think, every year or something, and his last prediction came out yesterday. So I thought I should bring it out to you. From a global perspective, it's an important voice to keep in mind. Thanks so much for tuning in. Have a profitable trading day ahead, and stay safe, most importantly.